We've seen very strong performance from residential property, particularly in the UK, but also in other European countries as well. The strongest performing countries tended to have been those where institutional ownership of residential was relatively low, where owner-occupier tenureship makes up the majority of housing stock in the country. We know that there's a fairly significant supply-demand imbalance in terms of housing in the UK, and demographic projections, employment projections suggest that that's going to continue to be the case, particularly in London and other sort of large city hubs. All of this is creating an investment market which is very attractive to large institutional investors. They're now beginning to understand the private rented residential investment play in the UK. They believe, looking at employment projections, looking at economic projections, demographic projections, that they can achieve a level of return which is satisfactory to their long-term liabilities. They know that they need to invest in the right kind of stock. You're talking about new build, purpose-built for renting residential stock, largely equivalent to the American multifamily model, and they think that if, when well managed, well maintained, they can get a 5–5.5% net income return. And if they're investing in a strong housing market with factors underpinning value growth as well, they're confident that they can achieve levels of price rise at least in line with inflation. So when you consider that, they're coming up with an idea that they can get a 7.5–8% total return on average in the long term. And to an institutional investor in this current market after the financial crisis, that's very attractive. That's not what they've seen from their core asset classes. Government bonds, particularly in large stable economies like Germany and also to an extent the UK, those yields have been compressed to all new levels. Equities, it's a bit more risky. Long-term returns are a lot lower than residential property, and they're also a lot more volatile. And commercial property to an extent as well, whilst not as volatile as equities, it hasn't performed as well as residential. A lot of investors are already in commercial, and they're now seeing that their future opportunities are better placed in residential, hence the increased interest from UK and overseas investors.